most people in Switzerland don't get approved for a mortgage, and I'm going to show you why. Have you ever wondered how a mortgage calculation works in Switzerland? I'm your mortgage broker in Switzerland. I will show you everything you need to know. So let's break it down together. Now imagine seeing a house for 1 million with a beautiful garden, and the asking price will be 1 million. So you will need equity of 20%. 200,000, and your mortgage will be 800,000, 80%. Now, what can you use as equity? You can use your savings, you can use your second pillar, your third pillar. You can also use gifts, or if you get some advanced inheritance, that's equity you can use. An important fact about the second pillar: you don't need to withdraw the money, you can just pledge it. But if you have any questions, just send me a message. And now, Switzerland isn't just popular because of Roger Federer, but also because of the first and second mortgage. I'm sure you already have heard about these terms, first and second mortgage. Now you're wondering, why isn't there a third or more mortgages? It's because of this reason. In Switzerland, you do not have the obligation to pay your whole mortgage back. You only need to make an amortization of your second mortgage. So this is very special in Switzerland. So let's see what that means. Your first mortgage will be 65% of the price. That means 650,000. And your second mortgage is 15% of the price. That means 150,000. Now, if you have equity of 400,000 and you have a mortgage of 600,000, that means you're below, or you're in the group of the first mortgage. So that means you won't have to do any amortization. But most people, they have equity of 20% or just 10%, and the other 10% they use their second pillar and just pledge it. And your second mortgage you will need to pay back within 15 years. This is the first step, and now we can proceed and break down the second step. And this is a very important part. I will show you why. This is called the affordability calculation. Can you afford the mortgage? And the interesting thing is the bank makes a calculation with 5% here interest. Right now, if you get a mortgage, you pay like 2% or lower than 2%. So, but they need to know, can you afford it if the rates go skyrocket high? So let's write down 5%. That means 800,000, 5 times 5%, 40,000. Now your amortization within 15 years. So we take the second amortization divided by 15 years. That's 10,000 per year. You can do your amortization with your second pillar. That's very important also for tax reasons. You can just write me a message, I will explain everything to you. And then there are incidental expenses. These are 1% of the price. So that means 10,000. That's not something you will have to pay to your bank. This is like just cost for maintenance, or if you need to do some renovations, just a suggestion what you need to save per year. And now the total is 60,000. Okay, and now the interesting part. When do you get approved for the mortgage? If the total costs of your mortgage don't exceed 33% of your income, then you get approved for your mortgage. So that means you will need to earn 180,000 to get approved. And it's not just you, your wife, your husband, whoever owns the house and is living in it. And now most people don't get a mortgage because the cost of the mortgage exceed 33%. They have maybe like 50% or 60%. Last week we got approved, or our clients got approved for a mortgage, and they had costs of 43%. A lot of banks told us no, but there was a bank who was very open to this constellation, and our clients were very happy. It's the first house they bought, and I'm very glad that they are happy. Now, you see how the mortgage calculator works in Switzerland. If you want to talk about your mortgage, if you want to know what's the maximum asking price you can go for, or if you have any questions about the equity, the amortization, just write me a message. I will be very happy to help you.